Is America heading towards a recession? We ask because US markets are jittery once again. There was a sell-off on Wall Street yesterday. Tech stocks took a heavy beating. The Dow Jones and S&P 500 are America's biggest stock benchmarks, the largest stock benchmarks in the US. Both of them fell by over 1%. Investors are feeling nervous again. They're looking for a safety net. Some broad economic trends are making them nervous. There are signs of distress in the job market, plus manufacturing is slowing down. Some fresh economic data has come out, and that has heightened recession fears. Let's look at this data. First, we have employment. More Americans are filing for unemployment benefits. There's a sharp spike in weekly claims. They've crossed to 249,000. Now, this is for the week that ended on the 27th of July. This year, this number has fluctuated between 194,000 and 245,000. That has been the broad range. But now unemployment benefit claims are above the upper limit of this range. And why is this worrying? Because more Americans are filing for unemployment claims than before. New applications have hit an 11-month high, which means fewer jobs are being generated. And that is a cause of concern. What about those who already have a job? How are they faring? Well, they've not been spared from the bad news either. Wages and benefits are growing slowly at a rate of less than 1%. That's the lowest quarterly rate in 3 years, less than 1%. So those waiting for a salary hike in the US should keep their expectations low. Unemployment still remains low in America compared to other places. It is hovering around just 4%. But the fresh data this week indicates that the job market is stressed. Job creation seems to have taken a hit. And that's the first major concern. The second concern is about manufacturing. Manufacturing activity appears to be slowing down. The index that measures this is called PMI. PMI is the Purchasing Managers Index. It has dropped to an 8-month low. In the month of July, it fell to 46.8. Now, ideally, this number should stay above 50. Last month, it was 46.8. This is also impacting job creation. Reports say factories are either reducing staff or instituting a hiring freeze. And this could mean that there's a slowdown in manufacturing as well. One reason for this could be the interest rates. The U.S. Federal Reserve is America's central bank. It's also called the Fed. Now, the Fed regulates the rate of borrowing. This week, the Fed held a review and it kept the interest rates unchecked.
Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures.
For a year now, the Fed has kept the interest rates steady in the U.S., and this is to fight inflation. But high interest rates also have a downside. They squeeze excess money out of the economy. And critics of the Fed say that high interest rates are hurting manufacturing in America. There is less money for expansion. They argue that the rate should have been cut sooner. The Fed is now promising a rate cut in the month of September, but experts fear that this could further affect growth.
I would say to Jay Powell, careful what you wish for, my friend. You were fighting for the 2% inflation. Well, to get to 2%, there's collateral damage. And collateral damage is a slowing of the economy.
Investors are trying to avoid risk. They're moving away from the stock markets and towards the treasuries. That's government debt, the money that governments raise from the open market for their expenses. Commonly, they're called government bonds. This is the money that a government borrows. Now, usually, they're safer than the stock market. It's a safe bet to invest in, and they offer a steady rate of interest. And there is safety of capital, of course, since governments are less likely to default. There is a rally in the American bond market. Bond buying has now picked up, especially after the events in West Asia this week, the attacks in Lebanon and Iran, where leaders of Hezbollah and Hamas were targeted. So investors are being careful now. They're factoring in geopolitical risks while making their investment decisions. But America's latest economic data is also worrying. It points towards weakening economic activity. It seems like a recession cannot be ruled out just yet.